Welcome to This Week in Money. I'm Jim Goddard. Today we have Black Friday deals from all our guests who have special offers for our listeners. Ross Clark from chartsandmarkets.com runs down the major markets. More all-time highs were set in both Canada and the U.S. He says a pullback in the following weeks would not be unexpected. Ross checks out gold, crude, and the U.S. and Canadian dollars. Publisher of Rick's Picks, Rick Ackerman, joins us from San Francisco to chat about the AI investment bubble, Bitcoin skyrocketing trip, the outlook for lithium, and the outlook for 2025. Editor of the Leibovit VR newsletters, Mark Leibovit, looks at cryptocurrencies, gold, crude, cannabis, and uranium. We'll talk to Ross Clark right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to This Week in Money.
And it's a pleasure to be with you, Jim.
Ross, do we have a special offer for our listeners?
Yeah, brand new subscribers. They get 25% off if they take out an annual subscription. They can find the link for that at the homepage, chartsandmarkets.com. And, we'd like to have a few people around and take advantage of this market that we're in right now. You know, it's for all that it's been a bull market, one, just buy and hold market style. There have been some nice dips. I mean, we recently had one at the early part of November, then again about 2 weeks ago. And here we are, record high close. The S&P is at 6,000 on the cash price as of this U.S. Thanksgiving weekend. And, it's classic. I think it's 17 out of the last 22 years the S&P has rallied through into Thanksgiving. So this year is right on track. What we would hope for is that at some point within the next week or so, you get the typical small pullback. We could end up retesting the 20-day moving average, which is what we did 10 days ago, and then look for strength once again as we move through December. Pretty important here that that 20-day moving average hold over the next couple of weeks, and the most critical support is the 50-day moving average. That was tested back, as I say, in the 1st of November, and it's tracking up pretty well. It's over 5,800 on the S&P index. You do not want to see that broken. Historically, we are in the strong part of the year. November and December are the two best months. But if you do falter in December, there have been some nasty downsides after that. So time to, enjoy the move, but be cognizant of what might happen if it loses momentum here. And, once again, getting a little bit of divergence on the advanced decline line. And, that is another piece that puts up a little red flag.
What's going on with gold?
Gold market, we had that big correction 2 weeks ago. Market has bounced back well. We're at 26.50, just middle of the trading range here. 20-day moving average held very well on the break. And, we are at that point where typically the second half of December through February is where you get to see seasonal strength again. So as long as the supports hold that we had a week ago, then I think there's a reasonable chance for the gold market to tack on some more on the upside. Been a good, strong bull market, and at this point, I don't see any major topping action. We had some minor tops that gave us a decent clean out, But for now, the direction is up. And, if we take a look at gold has been outperforming silver, and, if we do see a big move in silver and a catch-up, then that wouldn't be a surprise at all.
What's going on with the U.S. and Canadian dollars? U.S.
dollar, we got some pretty good overbought signals here as we went into the middle of, or I guess it was just the week before Thanksgiving, and have had an outside reversal week. So downside, the dollar index have been up at 108. We're back to just under 106 as of the end of this week. Wouldn't be at all surprised to see it correct back deeper than it is. I mean, this has been a pretty big run. We started at just over par, I think 125, and topped at 108. So pulling back maybe around 105 is a reasonable support area to be looking for the dollar index. And over on the Canadian dollar, it's, as one would expect here, it's been the real weak sister within the currencies of late, and especially now with the talk from the upcoming administration in the U.S. for a 25% tariff on U.S. on imports to the U.S. from Canada and from Mexico. That really was a knee-jerk reaction. Early in the week, we got down to I think 70.6 on the dollar. Recovered back to 71.25 at the end of the week, but the trend is still down there, and I think that upside the resistance is maybe at 72, but this thing, you could be looking at, as I say, maybe a small bounce, but the overall direction is nicely in place to the downside.
What's going on with crude?
Crude. We had 4 tests of the lower price levels in the mid-60s with pretty decent bounces, and as of Friday, this thing has rolled over. We're back down to $68 again. So, yeah, this is just for me, it's testing this support level way too many times. So, the seasonal low that we would expect sometime in December, early January, before reversing up. I think we've got a pretty darn good chance of seeing that. Now, there's an OPEC meeting next week. Maybe there'll be something out of that that supports the market. But if they don't do anything to support, then the easiest direction is down, and anything into the mid to low 60s looks like it would be a reasonable target before you get the seasonal rally. And we'll be looking pretty closely at how this bottoms out in the next 4 to 6 weeks, because there could be some nice potential on the upside.
Ross, thank you so much for the update.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on X at Charts by Ross. He also has a special offer for you. Coming up, Rick Ackerman next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He's speaking to us from San Francisco. Welcome back to This Week in Money.
Thanks much for inviting me on, Jim. And yes, I am indeed in today, sunny San Francisco.
Rick, you have a special offer for our listeners, free for 2 weeks. Can you tell us about it?
I do. If you go to rickackerman.com, you'll see a free trial button up top, and that will give you, without having to leave any credit card information, access to everything I offer, which includes not just the commentary, which is accessible usually at no charge, but also 2 great chat rooms that draw some of the best traders from around the world, and the actionable touts that are collectively an overview of the markets. I track the vehicles that are most popular, such as the E-mini S&Ps, COMEX Gold, NYMEX Oil, Microsoft, and a bunch of others. So there are some tradable things in there usually, but the idea of it is to give you a pretty good overview of the markets. And sometimes we have special request sessions, and so all that's available for no charge for, I think it's 2 or 3 weeks, if you just go to the page and click free trial.
President Trump won the election in a landslide. Is he going to have his work cut out for him with the disaster he's inheriting?
Yeah, I think he's pretty serious, too. It's a big job, and of course, he faces a mortal risk. The system that he's going up against tried at least, no fewer than 2 times to kill him, to murder him, assassinate him. So it's a big, dangerous job, and all of the agencies that he needs to eliminate are going to, it's like over their dead bodies, they're going to be eliminated. But that's a big project, and he's inherited an economy that, according to the headlines, is healthy, but of course it's not. It's just what we're experiencing is an asset bubble. So anybody who owns stock in America has nothing to complain about, but I do think they have something to fear, because we are in an insane bubble that has pushed stock valuations into very dangerous territory.
What is AI, artificial intelligence, and your thoughts on the artificial intelligence bubble?
It's a huge fraud. A lot of people think they're on the ground floor, they're on the gravy train, to mix metaphors. But as we've discussed in the past, I don't think AI is any better than what we see in our main interface with it. Number one, there's autocorrect, which is a joke, and we've got these supposed large language models that assemble so much of our human vocabulary that they can pretty much understand anything that's spoken and execute a command if that's what's needed. But in reality, it's dumb as a fence post, and the main applications of AI that we see are strictly to get rid of employees. And wherever AI is taken over, such as in the tech support world, where when you make a phone call to tech support, you're speaking to somebody, it's just a stupid bot. And you know that bot is not smart enough to explain to you how to hook up your printer when it drops off your home network or whatever. And unfortunately, it's going to become the end-all and be-all of tech support. So, and we've all had the experience, I think, of shouting into the phone, agent, 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 because the dumb as a fence post AI keeps giving us options that are not what we need. So AI is really, it's pretty stupid. And I think the main thing that the force that impels it forward right now is the objective of replacing employees with really stupid AI components. So just show me AI that works, and in ways other than I've described, and maybe I'll be more of a believer. But right now, I think it's just a lot of hubris.
Does the AI bubble, everybody throwing their money at anything named AI, remind you of the 2000 .com bust, when you just had to put .com on something and people would buy it?
For sure. And Wall Street has a way of concocting stories that you think, well, this is the biggest story they could possibly create. Let's say Bitcoin is money. But when they find something that has the potential to suck even more money into the investment hole, that's what they do. They fabricate a good story. And of course, the AI thing has the advantage of it's got a unlimited technological horizon, so that all capabilities can be ascribed to AI. There's nothing it can't do. And I see these high-minded discussions in the Wall Street Journal and other places about whether, when AI can do many things, whether we're going to become, as humans, subservient to it, or whether we'll think any less of ourselves. So when you push the philosophical envelope a little bit, there's this concern that AI is going to change the world so radically that somehow we won't be human anymore. But I think people are going to revolt against it long before that happens, or could happen. So, but I'm not really worried about these discussions about misuse of AI destroying the world. But initially, yes, you're going to see it harnessed mainly to the efforts of crooks, certainly people who try to steal from us on the internet, and that's what the internet is. It's one big crime wave. It will make it easier for people that work in bucket shops in Nigeria and Kazakhstan to work off AI automated scripts in order to perpetuate the crime wave that we experience from everything internet.
Now, Canada's major news organizations are suing the creator of ChatGTP for, they claim, illegally using their human-written articles to help train this artificial brain. And the suit is seeking up to $20,000 in damages per article used by OpenAI, which could put the total value of the suit in the billions of dollars. Are they trying to do the right thing here by trying to keep AI out of human hands, or trying to duplicate humans?
They are, but they'll lose. I mean, they're into an insoluble legal problem. The AI, let's call them machines, are trained just by inputting data, maybe not quite randomly, but essentially inputting all the data you can stuff into your learning model. So you pretty much you put all the information in, and it can cover everything from how to cook pasta al dente to dreaming about ever-ready batteries or something like that. So you put all the information in, and you train these models just with everything that's out there, every bit of information it can swallow. So there is some question as to whether, if you're feeding it information that is copyright or something that's trademarked, or that you're breaking the law, and you are actually. So I don't think the courts are going to be able to adjudicate that in time to stop it. So these AI learning machines are just sort of gorging themselves on everybody, on content that has been created at great cost by people who sell content, or people who rely on information that they paid to gather. So I don't think there's an answer there, and I don't think the courts are going to bring relief.
Yeah. Now, in the publishing industry, authors are worried that some publishers are demanding that their writers sign over their rights to AI for $2,500, and so that the computer can learn to write in your style. No need to hire you again.
Right, and the Hollywood strike made a big deal of that, because all the creative talent in Hollywood, such as it is, was concerned that they were going to all be put out of work, and of course the producers, people who pay to produce movies, and for that matter publishers who produce books, they're all saying, "Oh, don't worry, we're going to use AI just to provide a little bit of an assist. It's going to put commas and semicolons in your work so that it will be even cleaner." But the fact is that, at least in theory, AI could displace all the creative talent with its own brand of mediocrity.
Bitcoin, backed by nothing, in the is now in the $100,000 range. Is Bitcoin anything more than just a belief?
That's all it is. It's just a belief system, and I'll be glad to debate anybody on a couple of these aren't fine points either. The idea that Bitcoin is money, well, the question arises, what kind of money fluctuates in value from 9 cents up to $70,000, and then back to $12,000, and now up to $100,000? So money, it must have, if anything, a stable value. But Bitcoin's value fluctuates wildly with speculative activity, and it's not used as money. Nobody uses it as money because it's a very inefficient way of, or let's say a costly way of conducting a transaction, of recording a transaction. Credit cards do the job a lot better. And with double verification, the credit card issuers, the banks, seem to have licked the problem of fraud. You know, that they have algorithms that identify charges that might not fit your pattern of spending, and they'll notify you right away. And of course, when you have to input zip codes or other, your phone number, whatever, it stops fraud in its tracks. So credit cards are much better than Bitcoin, and nobody uses Bitcoin to buy stuff. It's just a purely speculative medium. And yes, it's backed by nothing. And the argument as to why it should be valued at $100,000, it comes just from one piece of a money argument, and that is that it's scarce. The original mintage of Bitcoin was 21 million units, and but I don't see anything about Bitcoin that makes it money, and there is nothing to back it up. There's absolutely nothing. So yeah, it's worthless. It's a hoax, and most of the criminal element online, when they want to pay off, when they want to ransom something, when they want to hold your hospital system, the data system as hostage, they always specify payment in Bitcoin. So Bitcoin is really it's the money of choice of the criminal world right now.
President Trump says he wants to involve Bitcoin somehow in U.S. currency.
Yeah, and I don't know whether he and Elon Musk were sitting around one day and Trump said, well, I'm going to throw you a bone here. But that's what it is. It was just pouring gasoline on a speculative fire. Trump vaguely suggesting that it'd be nice to add Bitcoin to the money system. But I don't see that happening.
Have you ever invested in cryptos?
Yeah, I deliberately took a plunge in a scam just to find out how it worked, and it was pretty clever. I mean, the language, the buzz, the kind of thing, the idea that was circulated word of mouth was that if you jump into this venture with $10,000 in cash, it will triple in, I think, 3 years or something. Or it was but it turns out, and I found out about this at kind of a Tupperware party given by a friend of a friend, and I took a $3,000 piece initially, and I nearly got my money's worth. They threw a big party down in Miami. And it was great food and great music and great everything. And there were Bitcoin success stories from all over the world at this meeting. And the woman, the friend of the friend, she had already made some money and cashed out, bought herself a new car. And she had done pretty well, but only because she was in on the ground floor. But it turns out that offer, like you just leave your money in this venture, and it wasn't Cryptcoin, it was one of the 2,000 boutique flavors of Bitcoin, and let's call it Boxium or something. And so I bought 3,000 units of Boxium. And that was the payoff. At the end of the 3 years, you would not triple your money, you would triple your Boxium, which could not even be converted into dollars. It had to be converted first into one of the more widely accepted cryptos, such as Ethereum, and then into dollars. And of course, when Bitcoin collapsed the first time from 70K down to whatever it was, 12K, you couldn't get out the door. You couldn't cash out any of these cryptos. They were all valueless. And what surprised me was that there was this muddle. The group that worked this scam, they were all young, supposedly very wealthy Asian men, and they put out kind of a mushy story about, don't worry, we'll make you all whole. You know, you'll get your money back. And what that was just more lying, cheating, stealing. They were simply waiting to see whether Bitcoin recovered, and which would give them the wherewithal to give you your money back. They didn't make that offer out of altruism. They made it simply because they knew they had this mailing list of suckers that had joined in the first venture, and why not work the same bunch of pigeons again? So that's the reason they said, look, we're working on a solution that will get everybody their money back. But what they're working on was simply, let's wait and see if Bitcoin recovers so we can work this whole scam again. And I'm not even sure they dreamed that dream that they would get to work the scam again with Bitcoin at an even higher price, but that's what happened. So I early on ducked out. The paperwork for my staying in the venture and converting my old crypto into some new kind of crap coin, I just didn't want to deal with it. So I told the person who brought me into it, I said, look, if you can figure out how to register for their redemption offer or whatever you want to call it, the money's all yours. You can have it. And I'm not sure if she did it. So all the Bitcoin scammers they've been blessed with this amazing, insane, and I mean that literally, insane rally in Bitcoin that has allowed them to scam the same people who got scammed the first time. And if those people don't know what's going to happen, that the ending will be the same, where whatever they hold in boutique Bitcoin flavors is going to be absolutely worthless, then they deserve what's coming.
Have you been watching the lithium market?
I did. I took the investment idea, and I don't think I made it money in my entire life on someone's hot tip, but I went into a lithium producer that was trading. It was a penny stock, and my friend who publishes his own newsletter said, no, it's going to $20 easy, but it actually went to close to zero, I think a penny and a half. And over that time, the whole lithium story was unfolding about how anywhere you mine for lithium, it destroys the environment. And what are we going to do with all these electric cars, their battery systems, when they wear out, and so on and so forth. So I've never been big on lithium, and I think there are people like Musk who are trying very hard to produce battery storage that doesn't require lithium in it. So I'm not really too keen on the lithium story, and it's just it's been used really to run a lot of scams in stocks. They just kite these stocks when the lithium story is hot, and so yeah, I'm not a believer.
What are short squeezes and how do they happen?
Well, a short squeeze in the stock market is a situation where not a lot, but certain investors are betting that the price will go down, and sometimes they're right for a dozen reasons. I remember I worked for Private Eye in San Francisco years ago, and we had one of the biggest guys in the short stock world come to us to he wanted us to investigate rumors that a company that put out things that were packaged in sterile packaging medical goods, that they were reusing them, recycling them, and so the more the well-informed short players will develop information that absolutely it almost demands that the stock price go down, especially for some of these heated stocks with fake stories. So they all bet against it, and there's always there's information to counter that. The companies themselves will always put out information that will say, "Oh no, he's full of it," and the stock will not go down in a straight line. It will fluctuate as hope rises and falls. There are some people out there who will stick with the stock no matter how bad the story and no matter how smart they are. even there have been famous scandals in the past, equity funding being one of them, where some of the smartest investors in the world they ignored the sirens and they just stuck with the stock as it came down from 100 to 90, 80, 70, 60, 50, and it stopped trading at 20. So when the short squeeze happens, because the people who bet against it are seeing these rallies, and in some cases they'll get a call from the broker that says, look, this thing's going against you. It's up $11 in the last 2 days, and your account is in deficit. You need to put up more margin. So they do, and sometimes the short squeeze, the peak desperation in short squeezedom is when you have to cover your short position, and within X number of days, and you can't do that. If you buy stock in the market, it may be let's say a 3-day process before you can actually physically own that stock or legally own it. So you have to go in the cash market, and that's a short squeeze that plays out in the cash market is very dramatic, because a stock might be trading for, let's say, $18, but in order to cover a short position for instant delivery, you might have to be in the cash market paying $30 or $40 a share for it. So, and the thing about every bull market, the major source of buying in every bull market is short covering. Bullish buying is never sufficient to push stocks through previous peaks. There's a lot of supply when these stocks move out of troughs. They've been sort of skittering along the bottom for years, and in order to push a stock through peaks that were formed on the way down, it takes not just bullish buying, which is relatively feeble. It takes urgent short covering, desperate buying from people whose brokers are sending them margin calls because they're short the stock that's going up. So that's the main mover of stocks in a bull market, short covering. It's almost, I'm not going to give you a percentage, but I'd say it's probably 70 or 80% of the upward movement through previous through supply zones. It's all short covering.
What is algorithmic trading, and should investors be concerned about it?
No, investors shouldn't really be much concerned about anything other than that they know about a company, they like the stock, they like the way the company's doing business, and they buy the stock. But algorithmic trading is it's not directional. It's mostly arbitrage, or setting up different kinds of hedges. But the algos typically do not trade on the basis of the stock's going up or it's going down. It's more the stock is going wherever it's going, and we'll make money on it. So the algorithmic world is always looking for, it's constantly mutating, because any trading system, algorithmic system that works, over time the performance will degrade, and it's very difficult to tweak an algorithm back to its original performance level. So you wind up with new algorithms being created all the time to exploit inefficiencies in the market, and in some cases the algo trading creates inefficiencies. So it's just a world of where mathematics holds sway to take advantage of stock price movement.
Do you think 2025 will be a good year for the stock markets?
We're so overdue for a collapse, and I don't know. I mean, I've been obviously saying the sky was going to fall for a long time, and the market has greatly exceeded the imagination, my imagination of disaster. It's postponed it in ways that were beyond anything I could have imagined. We're at the height of craziness right now, but of course the absolute height can be even higher. And of course, as I mentioned, everybody in America who owns stock, they've had a couple good months on top of a few good years. So everybody's feeling rich, and it's hard. It's very hard when you're in that position to take some money off the table, but you really should, especially with Treasury paper yielding more than 4%. It's not a bad bet. It's not a bad place to park your money or to take at least some of your profits. But most people, as we're going to discover, don't do that. They're kind of frozen in place, stuck in the market, and wondering what to do and thinking, well, while I'm thinking, it could be worse because every day stocks are going up and I'm making money. So everybody will get trapped at the top. And by everybody, I mean everybody.
Rick, anything else you think we should be keeping a close eye on right now?
Well, to reiterate, to double down on that point, I think the yields in treasuries are sufficient to cause anybody to get at least partly in the safety of treasury paper. So it's hard when you're holding stocks that go nuts every day, and you're getting rich with inflated asset values. But it's time, really. It's the profits are so substantial for anybody who's been in the market that that you gotta come out of some of it, really. And besides bonds, of course, there's gold, but gold has been acting a little bit squirrely lately, and it's possible that we have made an important top in gold. Bitcoin, I have a very precise target now. It's a little different from what I published a couple of weeks ago. I've rejiggered the chart a little bit, and if it gets past 100,000, if it closes above 100,000 for 2 consecutive days, I think it's going to $113,383. And I'd be very careful if you see Bitcoin touch that price, because that has a very good chance of producing a dramatic top. And that's it. But I don't think we've been in this situation. I don't think the markets have been such and asset value such that we've been in a kind of, it's not flashing yellow anymore. The warning lights are flashing red, so we should heed them. This market is not going to go up forever.
Rick, can you tell us again about your special offer and how people can sign up for it?
Well, if you go to rickackerman.com, there's a free trial button up toward the top of the page. And if you just click on that, you'll get 2 free weeks. Maybe it's 3 weeks of everything I offer, and you don't have to leave any credit card information. So it's not like you'll be auto billed. You just, when you get to the chat room, be sure to say hello. The chat room draws great traders from all around the world. And it's a place where timely trading ideas are very generously shared, and there's an amazing knowledge in that room about pretty much any subject you can think of. So it's a lot of fun. And again, just sign up for the free trial and say hello when you first visit the chat room. There are 2 rooms, actually. The other room is called the Coffee House, and that is for discussion of pretty much anything you want. The discussion there is free to roam, and it's a lot of fun too.
Rick, thank you so much for being on This Week in Money.
Well, thank you, Jim, for inviting me on. I always enjoy the opportunity to connect with your guys, and I'm looking forward to doing it again.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He was speaking to us from San Francisco. Coming up, Mark Leibovit, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to This Week in Money.
I'm glad to be here, Jim. Thanks again for having me.
Mark, can you tell us a bit about VR Trader, what it's all about, and what does VR stand for?
Okay, VR stands for a technical term that I've registered called volume reversal. And if you're a subscriber to a platform called Metastock, and used to be able to do it on TradeStation and eSignal, but you would see these little positive VRs and negative VRs on the screen, and this is what I use. It's a somewhat a proprietary formula, but it's based on the concept that volume precedes price, and it provides some really good both trading signals and intermediate signals based on the theory that smart money knows what direction the market's going, short and near term, and you see it in the increase of volume coming off peaks or coming off troughs in the market. So it's a great little technical tool, and I sort of improvised it and learned about it and created it, I guess, decades back when I was a floor trader on the Chicago Board Options Exchange, so we're looking for a little bit of advantage, but you got to understand at that time in my life, we were really looking for trades that would be for a day or two and not necessarily longer term. But now with the software, you can plug it in and you can see weekly signals, daily signals. Some clients of mine, use 15-minute, 30-minute signals, changes of volume. So the VR is volume reversal. It's just saying that sellers are coming into the upside or downside, and you're following the momentum. So that's sort of the reason why we call the site VR Trader, though I've been incorporating, as you know, a lot of other tools over the years. That's sort of my main trading tool. I put up a stock or an index, and I want to see both the price action and if there's any reversal of volume to the downside or reversal to the upside, and that gives you a trading advantage. And again, like I said, sometimes you see it on weekly charts or even monthly charts, so it's not necessarily a day trading tool. But I've incorporated other stuff over the years, a lot of cycle work, and you put, I don't know how many of our listeners are familiar with technical analysis, but you can put other stuff up on your screen, various moving averages. The big one that all the traders seem to follow, it becomes self-fulfilling, is the 50-day moving average, for example, or the 200-day. These are sort of textbook moving averages, so I have those up on the screen to get a perspective of where we are, in the moves. And we also use the tool called stochastics, which is a calculation of momentum in the market. And outside of that, that's sort of how I look at a stock trade or even, more of a near-term investment. But the tape and this, screen pretty much tells you what's happening. There's, occasional surprises, of course, but keeps you intellectually honest, and it's helped me over the years with some nice trades. So that's what VR is all about.
Do we have a special offer for our listeners?
Love to. Let's do our 50% off for new subscribers only. And you go to VRTrader.com, and when you enter, you choose a newsletter, of course. We have several up on the screen, but when you get to the order form and you see a little promo code slot, you enter the promo code 2022 half off, just as it sounds, 2022 HALF off and OFF, and you can get 50% off.
Are you a financial advisor?
No, sir. I'm used to be years ago. I'm not a financial advisor, nor do I currently provide financial advice. So we don't advise people on managing their money or anything like that. There are a lot of good people out there that do that. We're technical traders in the market.
Mark, how would you describe what's happening on the stock markets right now? Record highs hit in Canada and the U.S. Every week, it seems.
Well, I think a lot of it has to do with, Donald Trump's election results. And, I'm praying every day that he stays healthy and there's no adverse attacks on him as we've seen in the past. In fact, just getting off on a tangent here, our old friend Vladimir Putin came out with a statement, I think it was yesterday, that he thinks Trump could be in danger of some kind. So I just came across one of the Newsmax tapes, and I was, he's concerned that, the negative forces out there, such as the ones that already took a shot at him or a couple times try to assassinate him, are still out there. So I just thought that's interesting. But to answer your question, I think a lot of it is a Trump effect. And I think the market anticipated this, and I have some stocks and indicators that I follow, and I used those back in 2016, and they were correct when they moved up ahead of the election, indicating a good chance that he would succeed. So I think the market, it's like a crystal ball in life. The market sort of knows what's coming. It's a real gauge of sentiment and investment and public opinion and so forth, more than the traditional polls that are pretty much nonsense that we already learned were invalid. But the market move, I think, is also seasonal. The Santa Claus rally, the U.S. Thanksgiving. Usually the market, tends to bottom September, October, rally to the end of the year, and then you run into perhaps some New Year indigestion. So we're still in that overall positive period, and with some of the proposals that Donald Trump is talking about, like cutting back taxes and particularly on Social Security for U.S. Citizens, and a lot of work against the insiders, the dark state, the secret government type people that seem to have caused so many problems over the years. I think is a breath of fresh air for both Wall Street and individual investors. So, the sky's the limit. I mean, the country's been held back, both militarily and economically in a lot of ways. Proposals for a lot of higher taxes was on the drawing board with the Democrats, which is not going to happen now. When you say how high is the market always goes further than you anticipate, just as it goes down further. So who knows where the top is, whether there's going to be a top now or later. There will be corrections, obviously. There's no straight up market, and it could always be, outlier events. Now you have the current president, the lame duck Biden out there sending missiles to Ukraine, and a lot of talk about World War III. Of course, I've been talking about that for a couple of years. That's something has already been happening in a way because of the conflict that's been going on in the Mideast and Ukraine and so forth. So fear of what's going to happen with China and Taiwan. So a lot of geopolitical stuff, I think, has sort of been in the market all this time. On the other, aside from an atomic bomb and nuclear risks, the market seems to like war. So, unfortunately, with the industrial military complex and all the nonsense that's been going on for decades that Dwight Eisenhower warned us about, it seems like, this is not something that the stock market dislikes. So it's unfortunate comparison there. But the long-winded answer is we're in a positive time frame. There's certain sectors that are correcting along the way, others going up, others going down. Some of the drug stocks, for example, start to pull back because of fear of Robert Kennedy making some changes at the Food and Drug Administration and perhaps coming clean with some of the drugs that the companies are producing and, some of the disclosures and so forth. So, that sector had a little bit of a, setback. Then again, Elon Musk's Tesla stock, which was in the doldrums for a while, exploded, particularly with his close ties to Donald Trump and the success he's had with the company. You just got to focus on what's going on. A lot of the, I guess you would call uranium-based or the nuclear utility type companies that are, I guess, by demand because of the AI craze, sort of now getting into the nuclear generation business, nuclear power generation business. Those stocks remain strong. Some of the retail stocks are obviously strong, like Walmart hitting new all-time highs, Costco into new all-time highs because of, I guess, seasonality and also just, consumer optimism. So, you just have to go, sector by sector and see what's happening. But definitely, it's been a bull move here, and nothing lasts forever. And hopefully we don't get some, dramatic outlier event that suddenly switches things the opposite direction. But at least this time of year, I think you can remain positive and, keep your, finger on that sell switch if something, suddenly materializes that should not occur, but could occur at any time.
Cryptocurrencies, Bitcoin buzzing around $100,000. Is the sky the limit there, or is because it's gone up parabolically? Is it going to come down just as fast?
Well, this is the problem. It's been really volatile for since it all started. Around, was it 2008, 9, 10 in that area when you could have bought it for $200. I mean,
25 cents when it started.
Well, you're smarter than I am. The lowest I ever saw it was maybe 100 or 150. But I can't imagine someone who paid that little for it, Jim, would still be holding it.
Well, they sold it when it hit 1,200.
Okay, well, that was obviously a big success for them, right? But anyway, I don't know. I've been bullish on it, but it's been real volatile. I mean, going back to 2018, 2019, and had big swings up and down. I mean, it's been all over the place. So this is not for the faint of heart, unless you're thinking that it's going to be a Bitcoin reserve created by the U.S. government, which has been sort of rumored through the Trump circles somehow, or attributed to him in some way. But they have the Bitcoins out there every few years. There's this, I can't explain all the details of it, but there's less and less of them. It's international currency all over the world for those who've been using it. It's going back several years. A lot of companies accept it as payment for products and services. And the big story has been, pretty much going all year is BlackRock and Larry Fink getting behind it. As soon as BlackRock, which is the largest money management in the firm with trillions under management, proposed a ETF, ticker symbol is IBIT, and that's not the only one, but that the SEC approved that. I'm sure Gensler, the former head of the SEC, I hear he just resigned because Trump was going to fire him anyway, was sort of anti-Bitcoin and crypto, but Larry Fink is too powerful. I mean, a lot of friends in Congress, biggest money manager on the planet. BlackRock is the company. So when they got IBIT, the ticker symbol, approved, and that was months ago, I mean, that was wind at the back for Bitcoin, and still is. So what it forces institutions all over the world is now, because it's a legitimate ETF, exchange-traded fund, any money manager worth his salt has an allocation in Bitcoin, and that propels Bitcoin higher. So, when they buy the ETF, the BTF has to go out there and execute and purchase Bitcoin. So it became a self-fulfilling prophecy. It was a no-brainer once the ETF got approved. And it's like saying, will it ever stop? Did gold ever stop? The World Gold Council, created, years ago, GLD, which was the ETF for gold. And when people bought the ETF, they had to execute and buy physical gold to, fulfill the purchase of the investors who bought into the ETF. So what has gold done in the last 15 years? Sure, it's had volatility, but overall moved to new all-time highs with patience and time. And I think you got to build the same story for Bitcoin. Now, of course, there's a lot of other cryptos out there. You know that. I mean, several thousand of these things. There's all kinds of, vehicles related to that. Some of the companies like Coinbase, which is the big platform where you could execute the trades, has surged, into new highs. And there's Ethereum is starting to move up. And one of the chief favorites I've mentioned on this broadcast in the past, XRP, which is related to the company Ripple, which was involved with SEC lawsuits and so far has prevailed in those lawsuits. And now with Gensler out of the way at the SEC, probably more than likely it'll continue the success of their little. I think the last time we talked, it was trading around 50 cents. It went to $1.70 in the last week and a half, by the way. So it tripled just since I think our last broadcast or in the last couple broadcasts. So I think it's not the highest it's ever been. I don't have the record of it, but I don't think it's been much higher than this. So that's another play, which is cheaper than obviously Bitcoin. But you can just scan down the list. What about Dogecoin? D-O-G-E, Dogecoin. If they call it Doggy Coin, that's the one that Elon Musk likes, and he was sort of touting it 3 years ago. So that's another one you might want to consider looking at because of Elon's connection to that. So there's been a lot of fun out there with these things because, something like Dogecoin, was it trading, I think it's, I'm trying to think now where it was trading today, around 60, 70 cents for a coin. And, I mentioned XRP around $1.70. And the Shiba Inu, which is another, it's trading a, fraction of a penny. It's way down there with 6 zeros in front of after the decimal point. But since it's got a picture of the Shiba Inu dog on it, which was, sort of attributed to the Dogecoin, the Dogecoin a 3 years ago. There's a lot of traders and speculators that are playing with that one. And this is just the tip of the iceberg. I'm not, even though we produced a blockchain letter, I'm not an expert on all these. There's hundreds and hundreds of these, and you really have to focus and, do your homework on which ones make sense. But the blue chip is Bitcoin. And to answer your question, it broke out above that 73,000 level. We talked about that in the last couple of months. I said to you and to the listeners, if it can take out 73,000, it's probably going to go to 88 or 90,000. And sure enough, it went there and exceeded that and just got, a tad under 100,000. So using technical analysis, you would say, well, gee, that was your breakout point. 73,000. Shouldn't we pull back there at some point? Charts often you always see that pattern in charts. You go back to the breakout points on the chart. So ideally, doesn't mean it'll do it now. It could do it maybe after it goes to 125,000 and then pulls back. But that's sort of a pullback number if you wanted to fish for Bitcoin. And I'm not saying it's going to do it now or ever should do it, but technically, normally you see that type of technical action. So depends what your philosophy is in terms of investment and trading. If you're not in it, referring to Bitcoin, I'd probably look to some of the other alternative ones that are cheaper. But if you're patient and you wait for some pullback, it's probably still an opportunity.
What's happening with gold?
It's trying to bottom out here a little bit. It's had a bit of a setback. Remember, I had the thoughts that with Trump coming in, or the anticipation of Trump coming in, the geopolitical situation might stabilize. And I say that because look what happened when Hamas, attacked Israel. That was sort of the trigger that gold really broke out and took off last year. And I think there is some wisdom to the thought that particularly with Trump's success with the Abraham Accords and what he did in the Mideast, he's something else. Biden is a loser from day one. This guy or the people behind him have no interest in peace or a solution to the Mideast, and Trump was closer to it than anyone. Not only getting the embassy moved to Jerusalem, the American embassy moved to Jerusalem, but also the Abraham Accords. So I think the market was saying, if Trump's coming in, things may settle down in the Mideast, and maybe for gold as well, since there's other reasons you can argue gold's going up or should go up, financial stupidity on the part of our country or respective countries in managing their budgets and spending like drunken sailors and all that, and, the international interest in gold, particularly on the part of China and Russia and others, have been accumulating it, and the thought of a BRICS group creating a new currency and on and on and on. But I think I sort of felt that we're going to get somewhat of a pullback after, with Trump coming in and related to perhaps settling things down on the geopolitical scale. So it doesn't change the big picture positive. I still think gold's going to overall go up. I still have bigger upside targets, which I mentioned, but I think that's what's happened here. So I just think it's a corrective phase. And, we've seen over the last few years, anywhere from $200 to $400 corrections in gold, even when it's looking great, and then it goes up again afterwards. So I think, like anything else, you got to decide, like with the Bitcoin, what your time horizon is. I'm not selling my gold coins, but I recognize it got to 2,800 priced in U.S. dollars, and sure, it could pull back to 22 or 2,300 before it goes up again. And just keeping that in the back of your mind, if you're thinking of buying any more, that markets sort of zigzag their way higher, and in this instance, we'll get possibly a little bit more of of a correction before it's all over. But I'm still holding key positions in it, bigger picture positions because of my feeling that ultimately it will go higher anyway for other reasons than the geopolitical.
What's the outlook for crude?
I'm trying to stay optimistic. The charts aren't supporting that. What did do well, however, were the energy producing stocks, the big companies like Exxon and Chevron and names like that. And there's an index called the XLE index. It's an ETF. And just a few days ago, it was at new highs, new relative highs, that is, even though crude wasn't going anywhere. So the oil companies were making money. And apparently, at these oil prices, it's still, a profitable business. And we know that Donald Trump's going to open up the spigots on oil and production and so forth. So, it's a counterbalance there. Will the new production keep prices down, or just the fact that we can produce more and not have government restrictions, as we were seeing under the Biden administration, makes money for these companies? So if you're holding some of the big stocks, and some of these pay nice dividends, it was more of an easy investment play or more successful play than playing crude oil itself. And I don't see any reason why an Exxon or a Chevron or these others wouldn't continue to do well, since they're going to have a political administration in Washington now, which is pro-energy and pro-oil. So oil's not going anywhere. We still need it, even though, God bless them, Elon Musk and the EVs and the cars and all the nuclear energy we're now expanding into. Oil is still a critical portion of our energy demand complex. So we still need it for a lot of other reasons than running automobiles, as you know. So I'm not a bear on oil. It's just that, if you're trading crude oil itself, you're not getting any upside momentum here. You're getting it more in some individual stocks. So we're just going to have to wait for a trigger here to say, hey, this is a moment to trade crude oil, and now it's going to $150, and the picture has changed, and it's going to run for whatever reason is going to trigger that. So I'm bullish because I need it. We need oil, and it's still part of our energy complex, but at the moment we don't have a strong technical signal saying it's going to move immediately. So we're just watching it day to day, but we do like some of the individual shares.
What's going on with uranium?
It really slumped. It had a real correction here. It dropped, I think about $30 or $40 in price. Actually, the spot uranium prices. But some of the stocks like Cameco, the big energy company in the uranium business, has held up pretty well. You got to stay positive on it. I mean, you've got like Constellation Energy, that's being revitalizing the 3 Mile Island nuclear plant. There's all these nuclear, either junior nuclear or senior nuclear related companies out there that are trying to get into the business now, and this happened because of the AI demand and the energy demand for electricity that was not being able to be provided with current utility providers. So, they're going to need uranium, and I think if you see a stock like CCJ, Cameco, still holding up their uranium index itself, like I say, the price has dropped down a little bit, but the business of it is still very strong. The demand for future nuclear energy and the reinstitution of nuclear plants and creation of new ones. You got to remain positive, because this is really the big future. We've talked about this for years and years, that we really needed nuclear, this wind and solar. I mean, these are sort of fun things to have or use, but they amount to such a small proportion of the amount of energy that we need. And it was just a matter of time until public sentiment changed. And as it turned, it wasn't so much public sentiment, it was Wall Street. And it was those that are in the AI stocks, and the AI companies that Wall Street demanded that we need energy to make money in our AI stocks. So the big companies like Constellation Energy, we've got the Microsoft and some of these big players funding the production of nuclear energy because they need it for AI. So sort of Wall Street forced the acceptance of it now. And, without the AI, I don't think nuclear would have clicked in as fast as it should have. Should have clicked in years ago. But, it's like anything else, Jim. You follow the dollar. They needed the energy to make money in their AI operations, and Wall Street provided it, and that forced these companies to look for other sources of energy, and nuclear was the easy place to go, and they start funding it. So you got to remain positive on the sector. It's in the early stages. It's like saying, is AI over? AI is just starting. It's like the .com craze that started in the mid-1990s and went on for years before it finally blew off and got overdone. So it took about 5 or 6 years for that. How long have we been in the AI craze now? Maybe a year and a half or so. So there should be more coming. And as AI is strong, so should nuclear, because apparently they're tied to the hip now more than we would have ever imagined.
There wasn't any mention of federally legalizing cannabis during the U.S. election. Any hopes of that happening now?
It's sort of a lost cause here a little bit. There's been a lot of negative talk about now suddenly it's coming out, maybe cannabis is an entry-level drug, which we've known for years, but maybe it's not so good for you. You're starting to hear some of this stuff now, and the shares are really depressed. And there's supposed to be, the declassification or reclassification of cannabis in the U.S., from Schedule 1 down to Schedule 3, a much lower level. The DEA was talking about it, and they said they were going to wait until after the U.S. election to make any decision, and so far we haven't heard anything. And then you're getting this negative press about cannabis. And then you still have that Banking Act, which has been floating around Congress now for a few years, which is supposed to open up the legalization issue for banking institutions. So you have banking institutions, even though states may have approved and made cannabis legal, because you have a different situation in Canada completely here, state by state. So state says it's legal, but the federal law says it's still an illegal substance. So so for these companies, many of them can't open bank accounts, or they can't get credit cards. There's a cash business. I mean, all this nonsense has been going on, even though it's legalized in individual states. So this Banking Act was supposed to clear this up, and for some reason it just never goes anywhere. So, I'm looking at stocks, a couple of the names that are really cheap, and they're in our newsletter, that are U.S. based only, and have been making money. And of course, they were counting on the Florida referendum, which failed on November 5th, and that didn't help them. But they're still small, profitable U.S. companies, and there's still people buying cannabis, and it's not the super boom industry that we had hoped it would be. But there are some small companies out there that could benefit. So things could change really fast. I don't know what Trump's position is on this. We get all these promises coming out from Biden and Harris about how they're going to make cannabis legal, and they had all these presentations, and of course I think they were just trying to garner votes more than anything else. But I don't know what the Trump position is on it, and it's sort of floating around here. So we're watching the stocks. Some are really cheap, they're really depressed. Like the big one that was formed in Canada that you're familiar with, Canopy Growth, which, was $1 a share, went to $58, and now it's trading around, around $5. At some point, if something changes in the news, either with the DEA or with banking legislation or something else happens, there's going to be some trading opportunities here. So we watch them, because usually when things are down in the press and nobody's interested, that's probably when there's some opportunity developing. But cannabis is not going anywhere. There's CBD. There's a lot of people that claim that it helps them health-wise. You don't have a lot of, it's mostly anecdotal studies, but, you're not going to have the FDA and formal drug companies do the needed studies showing the positive results that a lot of individuals are saying, because why would they do that when they can sell drugs that make them money and would probably make many of their drugs obsolete? So as a result of that, there hasn't been all the studies out there that many of the paraprofessionals have been saying, that have been claiming that it really benefited, and a lot of seniors love it and so forth. So, maybe with Robert Kennedy in there, I don't know what his position is. I would think he's probably more pro-cannabis than he was pro-drug, but we have to sort of wait and see what happens there. But maybe something will trigger and they'll take off. So I'm just watching the stocks, and they're on our list. And, with stocks as depressed as they are, if something changes, there could be some, huge trading opportunity. So it's sort of a watch situation right now for me, Jim.
Geocosmic, a lot of northern lights expected across North America this weekend.
Right, and from what I'm reading on the geocosmic side is the storm that created these wasn't as intense as they were expecting, but it did create the lights. So sometimes you get the lights and shortwave radios are going out in certain parts of the planet. You don't hear about that on the top of the news, and there's still an effect on everybody. And as far as I don't know what else is going on geocosmically. If you just look outside, you got a lunar event happening now, and the bottom line is markets making new highs here. You can argue that maybe the market's running into sort of a short-term lunar cycle here. So it's something to pay attention to. But outside of that, not much going on other than the seasonal stuff. We've got the winter solstice coming up in the third week of December. That's something I keep an eye on, a week or two either side of that. Sometimes you get change of directions. But you have the lunar event right here, right now. So, maybe the market will pause here a little bit for a couple of days after hitting a new highs around Thanksgiving. But outside of that, unless I see some big shift in the volume to the downside or some dramatic geopolitical event or something, I think you got to give the upside the benefit of that. We'll see how the market trades on Monday after the long holiday, and we'll get a better sense whether we're going to hit a little bit of a trading top here or not. There has been a lot of exuberance, with the holiday and Black, Friday shopping and Amazon stock into new highs. So that maybe, you could argue maybe a little carried away here, and we probably need a little bit of a little pullback here after the holiday. That would be sort of my bet. And but the cycles are saying that's possible here. So let's see how it plays out early next week.
Mark, thank you so much for talking with us on This Week in Money.
Thanks so much for having me, Jim. Great. Talk to you next week. Thank you.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRtrader.com. He has a special offer for you, so look it up. He was speaking to us from Arizona. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Rick Ackerman, and Mark Leibovit. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen.